Now we're going to talk about how the joint revocable trust can be used to save estate taxes and protect some assets. So while you were alive, both spouses set up a revocable trust, all of the assets are in the trust, and one spouse dies. Well, you can go with option A, which is just leave it in the joint trust, keep rocking and rolling the way you were, and on the second death, it can distribute out according to the terms of the trust. Or the trust should have or could have provisions that allow it to split out into a family trust and a marital trust. Now, what that basically means is that you can pick and choose which assets go in which subtrust, if you will. But the huge advantage of this is right here, the family trust. And as you can see, the word says irrevocable, and sometimes that makes people get a little nervous. But in this case, it's a good thing, because even though you can't change the terms of it, at the end of the day, you still get to use it, control it, and benefit from it. And because it is irrevocable, it offers creditor protection and a stepped up in basis for the assets that go in there. So let's explain what all that means. Now, instead of this being my house, let's pretend like this is my office building here, okay? It's a piece of commercial property. And so all along, this piece of commercial property we own has been depreciating out, depreciating out, depreciating out. So you bought it for X number of dollars here. You've been depreciating it out, but when you die, it's worth an amount far above what the book value of it is, or the tax basis of it is. Well, if it's then transferred into the family trust, you get a stepped up in basis to date of death value. So the basis in it might be very nominal. It may be zero. This works beautiful on family farms where we need to get that stepped up in basis just in case the surviving spouse needs to sell a little piece of it off. It works beautiful on commercial or residential property that you've been leasing out, you've been depreciating out. You get a stepped up in basis, you can start the depreciation schedule all over again. So house, usually we leave over here a marital trust for a list of reasons, but other commercial real estate, property, things like that, investments, love the stepped up in basis there. What if you bought stock way down here and now it's worth something way up here? Well, at the end of the day, if you go to sell that while you're alive, you have to consider, what are my tax consequences to that? And if I pay those taxes and I reinvest it, can I make that back and then some? We don't know. So this is a guarantee. So if the investment, the stock goes in here, you get that stepped up in basis to date of death value. You can then cash out, and maybe if you want to invest it in other types of stocks, other types of transactions, you certainly can. So that's kind of a cool, fresh look at your investment outside of the box of what we do here. We are the estate planner, not the financial planner. Life insurance proceeds. Well, remember how I said that this was irrevocable and it offered asset protection? I can take the life insurance proceeds, pay them on into here, okay, pay them into the family trust, and then at the end of the day, that is 100% protected. So if I'm the surviving spouse and I get in a car wreck and get sued, this is 100% creditor protected, okay? Because it's the family trust, it's an irrevocable entity. It's one of the reasons why I want the car over here in marital trust. I don't want to subject these protected assets to a potential liability. Okay, so picking and choosing what assets go where, there's a lot of work and time and effort that goes into that. So don't take that lightly. Certainly consult with your estate planning and your tax specialist, because the family trust offers some fabulous, wonderful opportunities to preserve and protect, but it only works if they're utilized correctly. Other than that, you could be painting yourself back into a corner you can't walk out of. So if we can help you in any way, certainly feel free to contact our office. We'll be happy to meet with you to discuss that.